This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. So today on the show, I have Dr. Eric Prentis, and I think you're going to really enjoy this. Eric brings a wealth of experience and background. Professor at University of Southern California, author of The Astute Investor and The Astute Speculator. Both books are on Amazon. And the reason I spotted Eric initially was a Zero Hedge piece. And the first thing I have to say is I have to read just the first sentence. We're going to go into all of this, but the beginning of the article was the financial elite using academe for intellectual cover. They want you to believe that the markets are efficient as defined by the efficient market theory. My research strikes down this hoary old EMT economic dogma used by duplicitous bankers and hedge fund managers to con U.S. politicians and 99% of Americans. Eric, a bear hug, please.
Hi, Mike.
How are you?
I'm very happy to be on your program, and I'm a big fan of your trend following system.
Well, thank you. Thank you. It really is an article. I know I'm not going to read the whole article here online, but you have to go back and find this piece on Zero Hedge. It is absolutely just must reading. Let me jump back in time though a little, Eric, and the piece, just so everyone knows, the piece is called "Everything You Know About Markets Is Wrong." And this thing has been read by a ton of people. Tens of thousands of folks have seen this. So I wasn't the only one, but it just really struck me because from a societal standpoint, a political standpoint, a financial standpoint, this is what people don't get. Eric, lay the foundation for the credit crisis, for everything that started to unfold in the summer of 2007. Lay the foundation, how we got there, where we are today. What are we dealing with?
Well, trust is another name for credit. So what we have now is a trust crisis. Lenders don't trust borrowers to pay back the money lent, and borrowers don't trust lenders to treat them fairly. So the trust is gone. And that's the major reason that we remain in the credit crisis that we find ourselves in today. And unfortunately, the same people who got us into this problem are still calling the shots on Wall Street and in Washington. And obviously, no one wants to do business with a known cheat, so the economy tends to be just treading water at this time. So you can point to a lot of things that have happened recently. The first is the fraudulent subprime, the Alt-A, better known as liar loans, and the option arm mortgage loans, which were securitized and structured by Wall Street banks and sold as collateralized debt obligations. And these were sold to pension funds, insurance companies, governments, other banks. Now, the banker underwriting lender fraud and the Federal Reserve keeping interest rates too low for too long caused a massive housing bubble. And about half of all residential mortgages currently are underwater with a negative equity. And this is about to get worse. We have average home prices, which have already fallen 33% from their peak, and the Case-Shiller expects them to fall an additional 17%. Also, the bankers set up this mortgage electronic registration system, which supposedly registered homes as they were sold. MERS was basically designed to get around having to file property ownership rights at local courthouses. But now we don't know who really owns the mortgages, and the banks are trying to foreclose on these houses without having the proper documentation. So this has led to the robo-signing scandal. Banks are forging documents so they can foreclose on homes. So these are some of the problems that have not yet been solved, and that's the reason we remain in this credit crisis.
Okay, and I know you could, as a professor, I know you could really take that into some very detailed analysis, and you just gave a very brief synopsis of what's happened in the last 4 or 5 years. However, if I watch the news, if I listen to the chairman of the Fed, it seems to be that if we drop these rates down, and clearly they're dropped way down now, and we've seen this happen a couple times in the last decade, that this will rekindle, as you say, the animal spirits. The wealth effect will march into action, and all of these mistakes and problems that happen will just be washed away because we've now got the wealth effect back, and the animal spirits are back. Why is that not happening now?
Good question. It's a bit of a paradox that what the Fed is doing by lowering interest rates, this zero interest rate policy, has really only helped the bankers. It hasn't helped the savers. It hasn't helped capital formation. It hasn't helped pension funds. I believe CalPERS just came out and said they only made 1% last year. They'd have to make 7.5% to meet their obligations. It hasn't helped Social Security. So really, this ZIRP is counterproductive. It's not helping the final demand either, because people don't have interest income to go out and spend money on their grandkids. So basically, if we want to paraphrase George Orwell, it's difficult to rekindle animal spirits when all the animals are equal, but some are more equal than others. You can also look at Walter Bagehot, who wrote the book on how to get economies out of a financial crisis. And all of the central bankers know about this. Basically, it's what you do is you lend freely, but only to solvent firms and only against good collateral and at interest rates that are high enough to dissuade those buyers or borrowers who are not genuinely in need. Basically, what we've done is we've done the exact opposite. We kept insolvent banks alive, such as Citibank and Bank of America and others, and insolvent corporations alive, such as AIG, GM, Chrysler, GE, and politicians used the $700 billion in top funds, trillions of dollars in government system guarantees, trillions of dollars of stimulus packages, trillions of dollars in quantitative easing by the Federal Reserve to monetize the debt. So it accepted, the Federal Reserve has also accepted trillions of dollars in toxic assets from banks as collateral. Now, basically what we're doing is we're following the same strategy that the Japanese have used over the last 14 years or so in keeping their zombie banks alive, using massive stimulus package, zero interest rate policy, and unfortunately has not worked. And we continue to do the same thing. And as someone said, continue doing the same thing and expecting a different result is the definition of insanity. So basically that's the position we're in. And if you look at the results in Japan, Japan's stock market, the Nikkei average, has dropped 77% since 1989, from about 38,916 to now 8,750. So basically, we're doing the same thing that Japan did, and we're getting basically the same results.
Let me ask you a follow-up question to something you brought up. And just to clarify, you used the phrase in two different ways, just so people are following along. ZIRP, when you hear that phrase, is zero interest rate policy. I know you said it both ways. But as we think about zero interest rate policy, and I'd really love your opinion on this. I've tried to theorize about it myself. Why do you think an entire generation of people, because there's primarily right now, it's retired folks that have excess cash that are used to having interest income, perhaps the boomers that are now retiring that maybe have higher cash reserves. I don't think it's an issue as much for the 20-somethings, perhaps, that don't really have money saved. But why do you think there is not more of an uproar for people that have just lost all interest income? It's like it's not even discussed. They've just completely taken it away. And people do the right thing for 30 years, saving their money. And literally, I mean, it's nothing now. You could have hundreds of thousands, if not millions of dollars in the bank, absolutely producing no income for you. Why do you think has happened to us that as a society, we're not even complaining about that aspect, Eric?
Well, they keep scaring us. They keep saying, well, gee, we're going to go to a negative interest rate policy. Not only are we not going to pay you interest, we're going to start charging you if you want to keep your interest at the bank or your money at the bank. I think people are scared. They don't, they have.
You think fear is the primary issue that's driving?
Yeah, I really think that people have been told over and over again that this is going to rescue the market or rescue the economy. And they say, well, gee, I'll bear this burden for a little while and hopefully things will turn around. Well, I think that things are not turning around, and we're just in this lousy position, and people have been brainwashed. That there are only six international big companies that own all of the media. So I think the mainstream media is not, explaining this to the people. We have basically six companies that own 90% of the media. That's Comcast, News Corp, Disney, Viacom, Time Warner, and CBS. So they basically control everything that the people hear and know about the economy. So constantly, the financial elite are saying this is the way to get out of the problem. And unfortunately, it's not the way to get out of the problem. It's making things worse.
You know what I loved about your article that turned me on to your work was the fact that it was very pragmatic, it was very logical, very rational. You didn't seem to have, there was no indication that there was some kind of, you're not a political ideologue. You were just very rationally looking at these issues and saying, what's going on? Like what is, and is it a very rational analysis? So I have to ask, for the last 4 years since October of 2008, which was the kind of D-Day moment, I've heard politicians tell us that things are well, at least some side, at least the current president says things are getting better, and the opposition says no, they're not. But why 4 years into this are we not seeing improvements? What is the reason?
Well, obviously, I still go back to what needs to be done. This Walter Bagehot approach to what solves credit crisis, and we've done this many times in the past. He wrote the book on this. They did this back in 1825, and we've done it in 1907 and 1929. FDR did this in 1927 to finally get us out of the Great Depression. And if you look back at some of the things that happened in the Great Depression, we're not even growing as fast as they grew during the 30s at some point in time. So basically, we're eating our seed corn, and we've got so much debt. Basically, public and private debt is about 360% of GDP, and it needs to be about half of that. So basically, this debt has been pulling forward demand, and now we're trying to issue more debt to pay back the previous debt. But unfortunately, that's a Ponzi scheme when you get into that position. But if you stop it, then you have a debt vacuum, which causes a downturn in the economy. So basically, we spent $5 trillion in the last 4 years on stimulus packages or government debt, deficit spending, and trillions of dollars by Bernanke from the Federal Reserve. And basically, they're saying, well, we've got too much debt, but the way we're going to solve this is to give you more debt. Well, unfortunately, that just makes the coming crash going to be even worse. They say that Japan is a bug waiting to hit a windshield on a car going 100 miles an hour. The IMF just said that it's impossible for Japan now to get their debt under control. So when Japan finally blows up, it's going to be 100 times worse than if they had allowed this to happen in 1990. And obviously, if the Japan economy blows up, it's going to bring the entire world economy down because they're such an important player.
Eric, how can you frame this for people that might be listening and thinking, well, Eric's making a prediction about a crash and he's giving his opinion. I know we don't have the time today to completely go into it, but can you kind of maybe give a quick and dirty, there's a lot of math behind what you're saying. And when you talk about these inevitable downturns and too much debt and using more debt to keep the debt cycle going, can you kind of give a little bit of an overview from just why that can't continue?
Basically, because our debt to GDP is at 360%, which is the highest it's ever been. Well, actually, it's come down a little bit from the highest it's ever been. It was at 375%. But the problem is that we have so many Americans out of work, and also pay is not increasing enough. 30% of Americans cannot pay their bills, and basically they're being hounded by debt collectors. Well, obviously that's 30% of people that can't get more credit because, no one's going to trust them to give them more credit. So it's, our economy is not growing organically. It's, that they've wanted us to get more debt and consume, but we're not producing. We're sending a lot of these jobs overseas. So even if we do have increased spending, all we're doing is buying goods from China, so which doesn't help us. So it's interesting, they keep saying, well, gee, we're out of this. And we have these green shoots and everything's wonderful and Obama's going to win because we're going forward. Well, if you look at retail sales in the United States, they've declined in the past 3 months, and that's in April, May, and June. And this hasn't happened since World War II unless the U.S. is either in a recession or about to enter one. So it's going to be very interesting if we have the November elections while we're in a recession. I just don't see how they're going to be able to cover that up. And I think a lot of people think that, they've been having smoke blown at them for the last 4 years, that we've actually been out of the recession. I think an awful lot of people would say, gee, we're really still in the recession.
Yeah, I think in my just cursory analysis of friends, family, associates, I think everyone just seemingly is sitting on the edge waiting for the next shoe to drop. Let me shift gears a little bit on you and bring the conversation up of financial psychopaths. And I know it's a phrase that you have no problem using. And I think if I had to paint the big picture since the fall of 2008, summer 2008, I guess Bear and Lehman Brothers are right there. And today we don't talk about it because they were bailed out, but I don't know. I mean, I still don't really know why Goldman Sachs was bailed out, or Morgan Stanley, et cetera. That if Lehman and Bear were allowed to go under, why not Goldman Sachs, et cetera, et cetera. And then on top of that, we see in the last couple of years, we see Corzine, the head of a firm, and just goes under, and there's no perp walk. We see Madoff mixed in there. We see this recent fellow at PFG who apparently was taking his clients' money and building new office buildings, et cetera, et cetera. How did we go so far off the rails? How did we allow these psychopaths to take control?
I think mainly because they're so charming. They come across as very glib and hard workers, and they want to maximize profits, and they kind of hide behind some of the problems that they create, and unfortunately, these a lot of what I'm going to say here about social psychopaths, which are basically the same as serial killers, but don't resort to physical violence. Basically, these social psychopaths will say and do anything to get ahead and have no remorse or conscience for any destruction that they've caused. And as a matter of fact, if you look at a recent study, 26% of employees on Wall Street banks are social psychopaths, with most of them in senior management positions. And there was an eyewitness at one of the largest investment banks in the world who said they use psychometric testing to recruit social psychopaths because their personal characteristics exactly suited them to senior corporate financial roles. So basically, they're testing and hiring social psychopaths because they're so well suited for how Wall Street operates.
Do you think part of the problem and I think this gets back to my notion that people have not revolted due to the idea of ZIRP, zero interest rate policy. But I almost wonder if the dot-com bubble to some degree set the stage for what it was like, if you can make us 100% a year, like they did in 1999 on the NASDAQ, if you can make 100% a year, we don't care what you do, as long as you make us rich too. To some degree, are we not complicit with how some of this has happened, that we took the free lunches, we took the candy, and now they've taken it away, clearly. But is there still a hope and a yearning that maybe that Wall Street, as crooked as they appear to be, will turn around and give us that 100% a year again? Is that kind of what we're dealing with?
Well, I would say that, yes, we're kind of grasping at straws. And even though, we a lot of people consider the leaders on Wall Street social psychopaths, there's also an element within our politicians. People who strive for powerful positions tend to fall into this social psychopathic sphere. And I think, a lot of the people a lot of our politicians are also, have a psychopathic nature. So basically they're in league. They have basically the Wall Street bankers giving lots of money to the politicians, who obviously use that to get reelected. We actually have the large Wall Street banks writing their own legislation and also fighting the recent Dodd-Frank bill, which I think would go a long way to solving some of our problems. But Wall Street has been using their lobbyists and friendly politicians to water this down. And we were supposed to implement some of it this year, but the banks asked for a 2-year extension. So we're not going to do anything based on this Dodd-Frank Wall Street Reform and Consumer Protection Act. So basically, we have not made any structural changes to date on what could conceivably be the worst credit crisis in the world's history. It hasn't completely played out yet, so we don't know how it's gonna end. But I don't think, if you look at what's happened so far, that we can say that we're at the end of this. I think we could say we're at the beginning of we're just really starting this. Especially if we continue to follow Japan's approach. They're 14 years into it, and they still haven't come up with a solution to this problem. Certainly, you can look at the MF Global bankruptcy, where $1.6 billion of customer money in segregated accounts went missing. And here we have John Corzine, who is the CEO of MF Global. He's a free man today. He walks around, evidently last time he was spotted was in the Hamptons. He hasn't even been questioned about these stolen customer funds. And as far as I know, that $1.6 billion hasn't been paid back. PFG Best is another recent example. Wasendorf has been admitted to signing fraudulent documents for over 20 years. $200 million of customer funds and segregated accounts are missing. So here's another example where self-regulation, this National Futures Association, which was supposed to regulate all this, basically fell down on the job, and deregulation is not working. The list goes on and on. The bid rigging in the municipal bond market affecting trillions of dollars. Countries or cities and counties are going bankrupt. Jefferson County, Alabama, Stockton, Mammoth Lakes, San Bernardino, California, Compton, which may follow in September, and Harrisburg, which is the capital of Pennsylvania, may follow in November of this year. We have the LIBOR scandals, which are the biggest financial scandal ever by far. I mean, nothing else is even close, where this affects every person in the United States through your mortgages on your homes and commercial properties, credit cards, auto loans, student loans. Affects 350 trillion, that's with a T, trillion dollars of derivatives. And this LIBOR rigging, and there are a lot of, U.S. banks involved in this. Citigroup, JP Morgan Chase, Bank of America, Goldman Sachs, they all may be complicit in this. We even had our Treasury Secretary, Timothy Geithner, knew all about this back in 2008, along with all the bigwigs in finance knew about this LIBOR rigging. So everyone has swept this under the rug and said, well, gee, it's just boys being boys. They're out there, doing their thing. Also, all these self-certifying markets probably are in the same boat, and that includes the gold market and oil market. So we can expect the same kind of shenanigans there. And then you wonder where all of the Wall Street bankers get their money to buy off politicians. Well, here's a good example of where they get their money. They've been rigging the system.
It's all very sad. I mean, that's the only phrase that I can. The word that comes to mind for me is just sad. The whole situation is sad because you and I both know at some point in time the game can't continue. The musical chairs, the music will stop. There won't be enough chairs left, and there's only one way for markets to go at that moment in time. And then the masses that have perhaps bought into the long only mutual fund panacea will get creamed again for the third time. And perhaps the third time might be the charm, and instead of a 50% haircut, it could be much, much larger. Let me ask you though, what does it? Is it because of the media, or are there more of these financial psychopaths today than there have been in years past?
Well, I would say that the media has something to do with it. In other words, because the media is really owned by the multinational corporations, the people aren't being told what's really going on. So, just people aren't aware of this, and they're tied in with the what they're being told. So they just go along with how things are playing out, and unfortunately, the financial elite are just trying to keep the ball rolling so that they continue their rigging of markets. And when it all blows up, they're going to have their media people tell the population the wrong thing again, and the people are going to go out and try to blame the wrong people for this. So it's a hard thing to counterbalance, and your program is one way of doing that, and I think the internet really is the only positive in trying to get the true word out there. So people actually know what's going on. I think if you look at this why this financial psychopathic behavior is really noticeable now is that those fraudsters have really been successful over the last 13 years in getting legislation passed that allows them to do their worst with impunity. And in 1999, they had the Graham-Leach-Bliley Financial Services Modernization Act, which repealed the Glass-Steagall Act, which was instituted after the Great Depression to stop all of the imprudent bank speculation that went on, and that separated commercial banks from investment banks from insurance companies. Well, that's been repealed, so now they're all back together again. So we have this bigger financial system, which is now too big to fail. They also did the Commodity Futures Modernization Act in 2000, and this links the newly combined banking system with the shadow banking system, which most people don't know anything about, but it's basically a lot bigger now than the banking system. That includes money market funds, hedge funds, structured investment vehicles. So now we've made the too big to fail banks even bigger or too big to fail. And now that the financial system has become totally systemically unstable. And we found this out in 2008. And that's not all. They did the Bankruptcy Abuse Prevention and Consumer Protection Act, which makes it more difficult to go into bankruptcy. Recently, they just did the Jumpstart Our Business Startups, which is ostensibly passed to facilitate the use of internet services to invest in small companies, especially using this what's called crowdfunding, which people have been using to support artists and social activists. However, if you look at this, artists and social activists are completely different than stock sellers. And basically what this does is it guts the regulations designed to safeguard investors. It legalizes boiler rooms. So basically we have the penny stock boys getting involved here. And it also relieves businesses from preparing to go public from some of the most important auditing regulations that Congress passed after the Enron debacle. So basically all these investor protections are being thrown out the window.
Let me shift gears on you once again. I want to let you get into some of what really caught my eye about your work initially, and that's your work on the efficient market theory and offering an alternative view. Why don't you go ahead and define for people what EMT is, and perhaps talk about the three tenets that define EMT from your perspective? And I'll just let you kind of go there, because I think people really need to kind of grasp this. This is extremely important to wrap your arms around.
Okay. The efficient market theory says that market asset prices fully reflect all available information, and as a result, market prices are always accurate signals for resource allocation. This is the foundation of a lot of the academic models that they use that supports the whole idea of we should have smaller government through privatization of government services. We should go with deregulation. Markets always know best. We should have globalization. Again, we're relying on markets and downplaying the importance of our elected leaders. Now, this, unfortunately, it sounds good. In other words, we'd like to believe that markets act like this. But if we look at, what's happened with all of the rigging of markets, obviously markets can't be efficient if they're continually rigged. And also we have social psychopaths who are in charge of, trading in these markets to a large extent because they're big players. They do a lot of self-regulation. Well, a lot of this fraud does not allow for these markets to ever be efficient. Also, you can say that they also say that markets are in equilibrium, and if an unexpected event causes disequilibrium, it's only temporary. And in fact, that markets are self-equilibrating. Well, I think we've seen, in the past that markets that would not have come back up unless we had that huge TARP and government stimulus package along with quantitative easing. They say one thing, but when the politicians in Wall Street do actually the opposite. So it's, if you look at the types of things that this supports in the academic community, the list is really quite staggering. The efficient market theory supports modern portfolio theory, the capital asset pricing model, the Black-Scholes option pricing model, the value at risk models that have been so terrible at all these Wall Street banks, the beta values that people talk about all the time, the dynamic stochastic general equilibrium models. The efficient market theory is the foundation theory for how pension funds are invested and how security analysts put prices on securities. So basically, just about everything in economics and finance modeling incorrectly assumes that markets are efficient. So obviously, if we're using these same theories to try to get us out of this credit crisis, it can't possibly happen because all of our theories are wrong, because it's built on a foundation of quicksand. It's built on an impossibility.
Eric, you make me want to just put a helmet on, because there's no other choice then. If the whole foundation that got us into the mess, if everything was based on EMT, and now we're at a place where the same folks that used EMT to get us into it are now going to try and use EMT, or at least They're going to say they're using the
Right.
foundation. But it just, I mean, you're painting a picture that just seems fairly ominous.
Yes.
There's some kind of end game. Okay, let's cut to the chase. What's the end game in your mind? What's the end game?
Wow, that's
Do I have to dig a hole and get down the manhole cover and put a helmet on? What do I got to do?
Well, it's obvious that the people in charge don't want to give up their power, so they're gonna take this right to the bitter end. So I think that's a given.
That is. I mean, I want people to really reflect on what you just said, and it is a very clear statement, which is that politicians love to sit in those chairs. They groove off the power that they get from those chairs. They love lording over you. They like treating you like a marionette. That is fun to them. They are not going to give up those chairs quickly. Now, somebody might say, well, Mike, that's a little bit over the edge. They're public servants. They're just and they're to help us. Uh-huh.
Right. And if you consider that this social psychopathic nature is also shared by the industry that's giving them all this money so that they can run these massive campaigns. I mean, if you look at President Obama's campaign in 2008, he got many millions of dollars from Wall Street, and he didn't have to go on public financing against McCain, who was limited by his public funding. So Obama really outspent McCain in 2008, and he won. Well, if you listen to all the political pundits, they say whoever has the biggest war chest wins all the time. So, Obama, obviously, when he came in, didn't do anything to his backers. We have Corzine still walking around free, even though it looks like he stole $1.6 billion. And, none of the players in this financial fraud for the securitization of all these mortgage-backed securities, they're all walking around free. And I mean, there's nothing that's happened to them here. And Obama wants to get $1 billion for this November's campaign. And again, a large portion of that from Wall Street. Nothing's going to change. In other words, Wall Street is using their ill-gotten gains of rigging the markets to pay off the politicians. So,
do you think there's necessarily some sea change on the horizon if Romney's the president?
No, I don't think that it makes any difference whether Romney's the president or Obama's the president. I think that basically they're both Wall Street shills, and they're going to continue, doing what Wall Street wants. I mean, if you look at some of the major positions in government, a lot of them are filled by Goldman Sachs ex-employees. So, they joke about Goldman Sachs being called government Sachs. Well, the head of Italy, Monti, was previously a Goldman Sachs employee, I believe. And the head of the ECB was previously a Goldman Sachs employee. And there are a lot of Goldman Sachs employees all through government. I think Paulson, who was the prior Treasury Secretary, was part of Goldman Sachs. So, I mean, they're everywhere. So it's hard to get away from the fact that they control an awful lot of what goes on in the United States. And, it's almost like it doesn't matter how you vote, because the people in power are going to take orders from Wall Street once they get in power. So, it's
do you think there'll ever be?
frustrating.
Do you think there will really be a true uprising, a swell against the political class, whether the left or the right, until the Dow Jones is no longer elevated or floated or pushed to its current levels? Or does a lot of this really come down to if people truly see that marker, that big marker out there, which the S&P, the Dow, I think these are markers that people, they look at their retirement accounts, and in reality, yes, they're down some, but reality, the equity markets are pretty close to where they've been all-time high. So I think that those levels to me, seem like if those levels go to where they might naturally want to be. Now, look, I'm a trend following trader. I'm not making a prediction here. I'm not trading this way, but I'm saying that in having a political, economic, financial conversation with you, a societal type conversation, it almost seems like those levels have to go to where they would naturally want to be before any of this system, this negative aspects of this system that you and I are talking about could possibly change.
Yes, I would say that people have been told over and over again that as long as the stock market is doing well, the country is doing well. And obviously that's a huge lie. And as a result of this credit crisis, all we did was prop up the financial markets, and really we've let the real economy, fend on its own. So people know that the real economy is doing very poorly, but yet they look at the stock market and say, well, I've been told that as long as the stock market's up, that everything's great and it must be me. Well, again, the people in charge realize that, and that's why they're spending trillions of dollars to prop up the markets, the stock market.
Wow, people can wrap their arms around. I was just thinking that exact same thought to myself. What you just said is so freaking powerful that if people can understand that those in power are elevating markets to levels they would otherwise not be at simply to keep the chairs of power.
Yes, that's exactly what they're doing.
That's just, it's awful. It's an awful situation.
Right.
It's sad. It's disgusting. I want to take a shower. It doesn't make you happy to be an American. All the positive things they say about America they almost want to go down the tube. When you fully wrap your arms around what you just said, and you say to yourself in your heart of hearts, you know it's true, it's pretty gross.
Yeah, well, yeah. Again, you have to go back to realize you're working with social psychopaths, and these people just don't care. They just don't care. They're very happy to take all of the taxpayer money and use it for themselves. I mean, if anyone who knows Jamie Dimon at J.P. Morgan or Lloyd Blankfein at Goldman Sachs or other Wall Street leaders, they can tell you that they have not changed one bit since 2008. They're not repentant for the role in the financial crisis. They do not feel bad that the taxpayers had to bail them out again and again. And they've used that money to enrich themselves. They give themselves huge bonuses based on cooked books. They changed the accounting rules so that they could show huge profits, which really aren't there. And they've basically stuck it to the little guy. So these people, again, you're dealing with, serial killers that just that don't resort to violence, hopefully. And, that's just the name of the game. I'm not saying that these people, these particular people necessarily are, but if you look at what's happened on Wall Street, you have to say, some of these people have to be there, and they're not going to change. It's just not going to happen.
It doesn't seem to leave us in a good place. If everything we've talked about today is true, and obviously it's a brief conversation, but what now? I mean, I'm not a predictive type guy, not from a trading perspective, but I think from a societal standpoint, an economic standpoint, a financial standpoint, with the issues that you and I are talking about right now, I think people would be very curious to your views as to how this might all flesh out. I think we all know at some point in time it will get fairly nasty. I think people usually want to try and guess the timing of it all. How do you see this monstrosity of debt that we're trying to pay off with more debt? All these hucksters and fraudsters out there, whether it's on Wall Street or in DC, that are not helping anything. How do you see this playing out, Eric?
Well, basically they say that the way we're going to get out of this is through more debt. And basically we've hit a debt wall. We can't any longer service the amount of debt that we have out there. So that is a closed avenue. I mean, I think they're getting to the point now where they realize that it's not going to work. So there are three things that we have to do to get out of this debt crisis. First thing is deleveraging, and all that is a big word for paying down the debt. So we need to try to pay down the debt. The second is forgiveness. We have to swap debt for equity. We wipe out the current stockholders and force the debtors to assume an equity stake. And obviously this should be required for all the insolvent banks and companies. And then we have to go through liquidation, default, foreclosure, and bankruptcy. And this is the only way we're going to get out of this debt crisis that we're in. And, I'm not the only one saying this. The IMF did a study of 124 banking credit crises and found that purging the bad debt is painful, but it's necessary in order to get economic growth going again. So that's really the only way that I know of, and that we can get out of this.
Eric, but what do you think is going to really happen? Because all that's the positives. That's the positive view. What's going to really happen?
I think that they're going to try to electronically print as much as they can. But there's a downside to doing that. When they start that, it negatively impacts the real economy. Gasoline prices start going through the roof. Food prices start going through the roof. And that creates political turmoil around the world. We had the Arab Spring. We had a lot of political leaders change in the Middle East. There were uprisings in China. If they try to do that now again, it's going to compound it even worse. And, it's again going to impact the real economy negatively. So that's why we've had this, we've had budget deficits of 10%, but economic growth of 2%. We've had this terrible trade-off of spending money but not getting any bang from the buck, so to speak. So, they painted themselves into a corner, and they don't know how to get out of it. Is what the problem is. And if they do what's right for the real economy, it's going to hurt them, and I don't think that they're going to do it. So,
put my helmet on.
I would say that
bunker.
Yeah, you just have to realize that there are $707 trillion with a T, $trillion of over-the-counter derivatives out there. And, it's not a question of if that goes bad. It's only a question of when that goes bad. And you can look at, what happened to JP Morgan, their recent $5.8 billion and possibly $7.5 billion loss in their OTC derivatives market. That's a precursor. That's a prelude to what's going to happen eventually throughout the entire OTC derivatives market. And we just had JP Morgan mispricing hundreds of billions of dollars of credit default swaps. Well, this is just going to keep, scandals are going to keep coming faster and faster and faster and faster. Harry Markopolos, he's the whistleblower who kept telling the SEC for 10 years that Bernie Madoff was a fraud, says that when this unregulated OTC derivative market crashes, the evildoers are going to make Madoff look like a small time. In other words, we haven't seen anything yet.
And I think it is, if and when until the major equity market averages reflect something that looks like disaster, I don't think the American public or any public is going to pay attention.
Yes. Yeah, I think you're right. I think that mainly because most people don't know what LIBOR is, haven't heard of Bernanke, really, as long as it doesn't impact their day-to-day lives, they're not going to worry about it. And unfortunately, it allows the social psychopaths to continue doing what they're doing.
Well, listen, Eric, I can't hold you all day today. This is great information. I think for those folks that are awake, and maybe those folks that are not yet awake, this is a gentle prod in the soft underbelly to kind of wake up. But hopefully we can talk again. I've been speaking with Dr. Eric L. Prentis today, And, one of the things that Eric has said, which I think is so true, question everything an economist says. It is most likely based on the incorrect assumption that markets are efficient. Also, I want you to go read this article that originally turned me on to Eric, which is at Zero Hedge. The article is called Everything You Know About Markets is Wrong. Also, check out Eric's books, The Astute Investor, second edition, The Astute Speculator. You can grab those on Amazon. His website is theastuteinvestor.net. Eric, I appreciate your time today. I think people, like I said, if you're awake, this is, confirmation. And if you're not, hopefully it's made you question things and start to really be a little bit concerned.
Mike, it's been my pleasure talking with you and your listeners. Thank you for having me on your program.
I appreciate it, Eric. We'll talk soon.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.